I want to give a quick update about my gambling stocks. I have been playing AMC and OKLO. So let's start with AMC. Today, AMC is up about 11%. It was higher at the opening today at 6:30, was about 25%. Really good. Unfortunately, it did start dropping down. In any case, that does not affect my position. I took this opportunity to sell two cover calls that ending this Friday. Let's take a look at it. So I just sell this two cover call for $7.50. I have collected an average of 23 cent per share, meaning $23 per contract, resulting in, if you look here, resulting in $46 credit. This is the second cover call that I sell on these 200 share. If I go to my spreadsheet, you will see that this was the first one. I sold it on May 21st and it expired on May 31st. It was $7.50. I collected $64. And since it expired out of the money, I didn't pay anything to close. And I just at the beginning of the day today, I sold it. If only I have woke up a little bit earlier, I would have made a little bit more money. It was at 39. I could have sold easily, maybe at 35. In any case, I don't anticipate the stock to go into the money. So if you look at the spreadsheet, I have put an entry for the last one. In this case, if it's activate out of the money, I'm generating 1.11 on my principal actually, because my principal is much higher, as my average for these stocks is close to $21. In reality, it's much lower than $21 because I have collected so much credit and premium over the last year that I have held this stock. So it's probably, if I count all of it, it will be anywhere between $15 to $16. As you can see here in the money return in my spreadsheet, meaning if it get activated, I'm going to be losing 63%. In reality, I do not anticipate the stock to go above 7.5 until Friday, but I do wish it will go up. So if it did hit 7.5, hit 8, anywhere until 10 or higher, that increase in the implied volatility, it will allow me to roll it over. So if you went, let's say by Friday, the price of AMC was $10, I will be able to buy to close this one and sell to open one that expire in a month or two, or roll over my strike from 7.5 to probably 9 or 10 and collect premium on that rollover. But if the price expired under 7.5, then I will be able to just repeat the process next Monday and I will sell for a week or two. I want to also go to the spreadsheet and show you what happened last Friday. I have two options expired out of the money for my advantage. I have a 10 contract of puts that I have opened for 2 weeks. You can see here I opened on May 17, expired on May 31st. It was a put at $3 strike price, and I have collected $10 per contract, resulting in $100 premium. Since it's expired out of the money, I get to keep all my premium and my cash collateral. It did get released, so now I can sell a new cash secure put if I chose to. The second option that expired out of the money was the two contract call with a strike price of 7.5. I have collected a total of $64 for these two contracts just for 10 days. And here you can see the 5 position that I have so far on AMC. You can see the total return is 1,000, almost like 1,100. This does not include the contract that I have already closed or expired out of the money, and I was able to keep all the premium that I collected. All contracts are in a great stand right now. The only one in the money is the 5.5 put. I have collected premium on this put 2 times. So if I go back to the spreadsheet, so as you can see here, this is the first time I sold it. It was a put for $6. I collect $547 for the 7 contract. Of course, because AMC stock has dropped under the $6, I did not want to get assigned. So what I did, I went to roll over here. AMC on May 17, I roll over for 35 days until January 21st. I have reduced the price from $6 to 5.5, and I was able to collect $35 per contract, resulting in a credit again for $245. If you add this 245 plus the credit I collect here, 547, collected 792. So going back to the option, right now to close is 917, meaning at this point I am down just $125. It's really not that bad, If the AMC stock continue on this trend going up and down every few weeks and without collapsing to the $3 and staying there, I will be able to keep rolling over. Probably the next time I will roll the 5.5 to a $5 for 1 month, collect premium until either the price of AMC will rise and I will expire out of the money, or I will collect enough premium just to close it without worrying about taking a loss. Before ending this video, I want to discuss another gambling trade that I have been doing recently, which is on AKLO. It's a SPAC company that recently have came to the market, and if you look at the last 3 months, you will see the volatility. It went up to 18.23 when it get announced, and then after that it dropped, as you can see, and it have been volatile the last few weeks. I don't have all the fundamentals about this company, and obviously since it's a new SPAC company, there isn't a lot. The one of the reasons that made me look at this company and consider just gambling on it for a short period of time is the fact that it had very high implied volatility and it was backed by OpenAI CEO Sam Altman. That's alone, it's a big testament for the company. Let me show you some of the trades that I went through. So these are the trade that I have been only playing cash secure put on it so far, and have been collecting premium, avoiding assignment, and been going great so far. Been going my direction, which I'm very happy with it. So if you can see here, the first put I sold here, it was 2 contract for 7 days, just 1 week, and it was on a strike of $10. I collected $64 per contract, so that's 128. And the other one was for like a little bit above a month. As you can see, it's 42 days, is the same strike, and I have collected $200. That's just crazy. $200 to sell a strike of 10. Of course, that's because of the high implied volatility, because the company is brand new. You can see here I did a rollover for the first strike since the price dropped. I roll it over from 10 to 7.5. Let me see if I can find the trade. You can see it here. I roll over the OKLO, the $10 put, all the way 2 months for 7.5, while collecting a premium of $20 per contract, resulting in a $40 credit. I sold here more puts on OKLO for 1 week. This is for a strike price of $8 this time, and I collected $20 per contract, resulting in a $100 credit to my account. You can see the other option in the spreadsheet. Let me go back and show you the current open position left on the OKLO stocks. Just keep in mind, this company will move big moves to the upside and to the downside since it's a brand new company. Okay, so that will be all for today's video. I wish you best of luck in your trades. Hopefully, as always, identify clearly which one is a long-term investment, which one is a short-term trade, and which one is a gambling trade. Clearly, for me, these two names are pure gambling. So I know that. As long as I know that, I would not allocate more. As you can see, the percentages, if you count it per week, per month on these names, will be very high, but so is your potential loss. Keep that in mind. Like, I lost in the past on few trade and it does not feel good at all. If you find this video useful, please consider subscribing to the channel, leave the thumbs up, and if you have any question or trade you want to ask me about, please leave a comment and I will respond to you. The information provided in this video is for education purpose only and should not be constructed as a financial advice. Investing involves risk, including the potential loss of principal.